So our strategy with the IUL is one of the most powerful of all comparable life insurance product options. So the UL has lower returns, and it's based off of the company assumptions. So they pretty much control that. And if they control it, they're typically going to give you less. The whole life dividend is more sluggish and has higher expenses, and it responds slower to good market conditions. The VUL has potential to lose big, as we just said, when the market has a downturn. The great thing is the IUL is guaranteed not to lose money due to market downturns. And over the last 24 years, the IUL, the blended index, which most of our clients choose to elect, has returned an average of 9.24% annually over 24 years. So the IUL contains the perfect mix of control, protection, and return potential for a foundational asset. Control, that means the returns are based on the market performance and not preset by the company. Protection, the 0% floor level means that you won't lose money guaranteed. Market downturns and the high potential for return, as we just said, 9.2% average per year, average over 24 years. So just some quick bullet points, the components of our specialized type of IUL. And by the way, just so you know, there are many different types and versions of Index Universal Life products out there. Ours is a special, unique, patent-pending program developed by a really ingenious person, and we believe it is the strongest, most powerful IUL on the market, bar none. So, as we said before, very flexible premiums. We do have a death benefit. If you compare that to the S&P 500, if you put your money in that, there's zero death benefit. All right. You have the cash value account. You have the ability to earn returns on that 0% floor to the 17% cap. You have the option to borrow your cash value account at favorable rates and use it to do anything you want, and you can do it at any time. So your cash value account, you grow that account. You can pull money, borrow money out of that at any time you want, put it into anything you want, and if you choose to repay it, you can, but you don't have to repay it. You fund it with after-tax dollars, so that is different compared to an IRA or 401k. You put in pre-tax dollars. With the IUL, you pay the taxes on the funds first, and then you put it in there. But the funds grow tax deferred. You can access them when you take your money out. You can have a tax-free retirement for the rest of your life. So you can pull those funds out tax-free, which is amazing. And we have some more dynamite videos on that later on in this series that will go into much more detail that I think will really knock your socks out. And there's no distribution penalties when you pull the funds out or borrow the funds. It's completely private, the IUL. There's no IRS reporting required whatsoever. We can set up, if we properly fund it and properly structure your Barefoot Retirement plan, it can generate a lifetime tax-free income for you. There's no investment restrictions on the funds that you borrow out, and so many of the other, with the other funds and the other programs out there, they're highly restrictive for what you can put them into. This has zero restrictions. Creditor proof in most states, even creditor proof from the IRS. No contribution limits. You have to be approved for various limits, but compared to a Roth or 401k IRA, there's no contribution limits. There's literally people that put millions of dollars a year into IULs. They have the lowest fees in the industry. The funds can pass to your heirs tax-free, which is amazing. And it gives you the maximum flexibility and safety. So that's it for our high-level look at the IUL, and we'll see you on the next video.